Hey everyone, how's it going? Welcome back to this week trade recap video. This week have closed down NASDAQ, dollar yen, and Swiss yen for some profit, and I also entered Euro Aussie for a loss. So let's take a look into these three positions that I opened since last week and what are my management on closing them and the new trade that I've entered this week. Any question, comment, let me know below, then let's get started. So from previous week trade recap video, you understand that I entered these three positions and then I close them down as we see on the lower time frame. This is really important that we need to manage the trade accordingly, right? So we know the confluence at the time when I see this ascending channel, when I see this breakdown followed by correction, and that's how I enter the position. Now, if we dig closely into the price action here, this is the important part where management comes in, is that we see this impulsive move pushing down, followed by a little bit of correction to push down lower. So I was looking to see if this is going to be another correction to continue the price longer. It ended up just pretty much had a bullish reversal, right? We talk about these kind of price actions, especially on the lower time frame. You're going to utilize this to your management approach. Impulse down, not followed by continuation to go lower. Instead, it becomes a reversal and it pushed the price up. And once the price pushes up, I already kind of moved my stop loss to break even to this area, about 1.5 to 1 or so, kind of monitor to see if the price is going to continue push up or it's kind of hovering around this area, then start dropping down. But when I start seeing price start forming this kind of a bullish continuation correction, looking like almost like a flag, right? So it becomes an inverse head and shoulder pattern on top of a bullish impulse followed by a continuation price action. So that's when I exit the trade about here when it breaks above this flag for about 1.8321. And this is why I think the management comes to lower time frame really important. While we have very good confluence on the higher time frame, we have all this higher time frame confluence. We see that a potential sell opportunity out of this higher time frame parallel channel, lower time frame ascending channel. We're expecting this move to potentially go down, but we also cannot just be married to our analysis. We need to understand that the price is giving you a bullish reversal type of price action, and we have to exit or we have to manage it accordingly. We cannot see if we don't take approach, we don't do anything, price push to the upside, basically hitting your break even. So you're gonna see a trade that running almost 3% and end up taking a break even. That's going to create a lot of emotional stress onto you. So I want everyone to understand that manage your trade accordingly, right? Securing profit is better than no profit, and understanding that even if you exit here for a little bit of profit, and if the price does end up creating deeper correction, something still giving you a bearish kind of bias, you can still re-enter the price and still going down. But we need to take profit because we don't want to see something like this to happen. You see, after a bullish push to the upside, basically if you set your move your stop loss to break even, you would take a break even position and is continuously forming bullish kind of price action and push the price up. So that's why you have to understand, manage the trade accordingly, right? Don't let the profit or don't let the unrealized profit make you feel negative or emotion. Only when the trade is fully exit, then that's a realized profit. Don't let these profit that you haven't exit for create emotional stress into your mind. So that is NASDAQ exit for about 1.83%. Let's look at dollar yen. So dollar yen was also a trade that I closed down. Let me just grab the short position now. So this is the short position I updated from last week. We know that the overall higher time frame at the time was looking really clean. We had this impulse breakdown followed by correction, another push down, and followed by kind of a rising wedge pattern. And I think it was on Monday or Tuesday when price started forming these kind of a pretty good bearish kind of impulse, bearish kind of price action, push the price down, and then basically this is the sign from the market. When we have this kind of a sharp impulsive move, naturally price should create continuation to go lower, but instead it had a really bullish reversal up, and at the time it was forming a correction like this. It continued to push up. When I woke up around somewhere here, when I see the price start giving you kind of this kind of formation, it's almost like ascending kind of formation, but it's not looking like it's going to continue. Right? You see this move pushing to the downside and then pull back and push down again, kind of forming a reason double bottom here, which is not what I want to see on the lower time frame. And this also kind of give you a little bit of a head and shoulder, but still fail to push the price lower. So basically what it's telling you that the momentum of this bearish momentum is no longer valid. It's no longer strong. We're getting this bullish push up to the upside. And when I see this double bottom, when I see this head and shoulder fail, when I see this overall ascending structure fail as well, I just moved down my stop loss to kind of the previous low here. This was the previous low of this correction as well. So I'll pretty much exit the trade for about 1.5% here. Again, if we didn't manage it or we didn't actively manage it, see prices push up to the upside, kind of forming another correction and push higher, and you want to end up with a break even once again. So even though I didn't exit at the fully bottom, which is very hard to do, right? We understand that we're reacting to what the market is doing, but we still need to secure profit. I secure profit here. I could have probably secured maybe 2%, but 1.5%. I want to give the price a little bit of room to correct if that's what it's going to do. But nevertheless, because the impulsive move wasn't going to be the one pushing down, we see this move pushing down, which just there's no continuation to go lower. So again, it's a sign from the market that the bearish momentum is exhausted. And if we look closely here, we're getting a lot of bearish confluence as well. Now we're forming basically an inverse head and shoulder as well here on the lower time frame. It looks like this is going to continue higher, and that the original analysis, the original bias was no longer valid, right? So we have to act accordingly, and we have to manage accordingly as well. So dollar yen able to get off for about 1.5%. Let's take a look at Swiss yen. So Swiss yen also was a trade that I opened from last week and closed down this week as well. Originally was looking to see this is going to be a continuation correction to push lower, and we did get pretty strong momentum pushing to the downside. But again, we the price just didn't give us that bearish confirmation or continuation. When we entered this kind of a flag position, we price pushed to the downside. I had a little bit of pullback. This is when I had the stop loss at break even, and then we pretty much complete this continuation. So impulse down, continuation, we push down lower, and that's when I moved the stop loss to at least 2-1-1. When I see this bearish move down to the price, I was really pleased to see that, and I was kind of wanting to see if we're going to get continuation to push lower. But the same thing with dollar yen, same thing with NASDAQ. When you see closely onto the lower time frame, when you see this impulse pushing down, is followed by a reversal impulse, right? So naturally, we know after impulsive move, even if the price is going to reverse, is likely to give you a reversal correction to reverse. But if it just kind of have an impulse down and followed by a reversal impulse, that basically is telling you that the momentum is so exhausted that the bullish momentum took over right away and reversed back up and then kind of just formed a continuation here and just pushed up higher. So that's the sign from the market when I see this move pushing down, reversed by it, and see the beginning of this kind of flag as a potential exit point when the price just reversed back up. So I exit for about 1.6% or so, and then just to see price pretty much continuation here and push the price up. Again, active management, right? So you notice all these three positions I had since last week, they were running a little bit more profit. I couldn't have secured all that profit, but I actively managed it so that I can still capture a little bit of profit and move on to other opportunities. That is what we have to do as price action traders, because we can never predict the future. We can never be able to sell at the highest point and then exit at the lowest point. Okay, we have to react to the market, what it's telling you, and in this kind of situation, I'm very pleased to actually exit for a profit instead of taking a break even or a little bit less profit, which is what I probably used to do years ago. When I see a trade pushing down like this, and then when I start reversing, there's probably some ego in me or some negative emotion years ago when I think, well, I'm just going to hold through this pullback and then hopefully this will continue to go down. Well, hopefully in trading, it's not going to work well, right? You can see if I was to do that, if I had this kind of management years ago when price pushed back, and pretty much you'll see a trade I hit 2% and end up with a break even. And that's going to create a lot of negative stress once again. So Swiss yen exit for a little bit profit, about 1.6%. The last trade I'm going to go over is Euro Aussie. Euro Aussie actually took a full 1% loss. Let's take a look at the actual management behind it, or actual entry and etc. So I talk about Euro Aussie here for the really strong bearish move to the downside, and we get into this kind of a parallel channel kind of correction. I got a question asking about how to draw the correction. Someone said that doesn't this cut through the correction and this should be a bullish momentum? Well, it depends on how you see, because this is kind of what we call pattern separation. When there is a pattern here, there's a structure here, and then there's another pattern here. But this is just more of an extension of this parallel channel here. The overall bearish bias is there. The overall corrective structure is there. Right? Just because there is a corrective structure kind of pushing out of this parallel channel, it doesn't void the fact that this is a overall consolidation period to consolidate this potential impulsive phase, and looking for another impulsive move to the downside. I'll definitely make a workshop video explaining kind of pattern separation and evolve and then uh, patterns within pattern kind of thing, but this is a quick explanation of this. So when I see price make this ascending channel, a new pattern out of that parallel channel that we saw, and if we look closely here, I like how there is a impulsive move pushing downside, and this wasn't going to be a continuation. Naturally, it usually would be, and in that case, if you had the channel drill like this or something, and if you see this move to the upside, naturally you would think this is going to be a continuation to go higher. But instead, if you look closely, it did not, because again, this is a ascending channel that is a separation from this parallel channel. And basically, I see it as a reversal, right? So a bullish move to the upside, reversal correction, and then kind of reverse back down. So some of you guys entered from here. I think that's totally valid. I just didn't catch this. I wasn't there at the chart to catch this. When I see move push down actually breaking out of this higher time frame ascending channel, so I was looking for a potential entry. At the time when I see this a little bit of flag, I set an entry order below, right? And then I went to sleep around this time. So a little bit of mistake from me. I want to be honest with that. I set an entry order. I probably should have taken it off. Because the price kind of continuously moving up, but I was already falling asleep around this time. Originally, I want to capture this potential move, like this flag, if it's going to be a continuation to go lower, and that will tag me in and push lower. But I didn't expect price to kind of just move all the way up like this. If I was awake to do that, I probably would remove this entry. I probably set even higher stop loss, but I did not. So price pushed down, tag me in here, pretty much just barely tag me in here, and then just consolidate here and then push up right away, because my stop loss at the time was just trying to be higher than this flag here. I didn't expect this move here to happen while I was asleep, but that's a lesson learned or a good experience for me to always make sure to remove the entry point, right? So, but the overall bias doesn't change, right? Just because I take a 1% loss here, it doesn't change the fact that I'm still looking for some sort of sell opportunity here. This basically just shows you that this correction here wasn't enough to correct this move. We could potentially expect a bigger consolidation here. If that does, I will still look for a potential sell opportunity for here, pushing down the price. I think that would be still reasonable to look for. And everything that we talk about in terms of top of the action, top of price action, overall move here, I think it's still very, very valid to expect a continuation here. If it does form, then I expect move to push down to the previous low like so. I still want to be able to capture this move if that happens. So there it is, guys. This is this week trade recap video. Like I said, I only entered one position this whole week, which is Euro Aussie, that entered on Friday, took a 1% loss. Swiss yen exit for about 1.6%. Dollar yen exit for about 1.5%. And NASDAQ exit for about 1.83%. Any question, comment, let me know below. And I think the one last thing I want to touch base on is NASDAQ. Even though this potential move did not continue lower, but you can see this move pushing up. So if this is going to kind of start reaching to the top of this higher time frame parallel channel, and then we start getting kind of corrective kind of price action, we're seeing this as an M style pattern, double top, a lot of bearish confluence here, I would still come back and I would still look for a potential sell opportunities. So any question, comment, let me know below, guys, and hope to chat with you guys all next time. All right, thank you very much.